Okay. So we're going to look at a couple of payroll journal entries. I have posted the Chapter 9 handout, which you can find under modules. And we're going to look at question 2, which is right here. All right. So it says Santa Barbara Express has 4 sales employees, each of whom earns $5,000 per month and is paid on the last working day of the month. Each employee's wages are subject to FICA Social Security taxes of 6.2% and Medicare tax of 1.45%. Withholding for each employee includes federal income tax of 16% and monthly medical insurance premiums of $110 per each employee. Okay, so the first requirement is to prepare the general journal entry to accrue monthly sales salaries expense at January 31st. All right, so let's do that. Okay, so with these entries, the first step you want to do is compute gross salaries. All right, and that's your expense. And I modified salary expense for sales salary expense since the problem specifically specifies these were sales employees. All right. Okay. So each employee makes $5,000 per month, and there are 4 employees. All right. So gross sales salaries expenses $20,000, right? But that's not going to be the net amount of the. That's not going to be the amount of the checks that the employees actually get because of withholdings. So let's start with the withholdings. FICA, Social Security payable. Right? You may remember. You may recall. Um, your employer withholds these, but they have to send them to the government. All right, and that's 6.2% of the gross. All right, and it is worth noting that FICA tax does eventually go away once you've earned. I think it's 116,000, or maybe it's 118. It's an index number; it changes periodically, but it does eventually stop for high income earners. All right. The next deduction, FICA, Medicare, payable. Similar computation, but Medicare is 1.45%. All right. Federal income taxes were withheld at the rate of 16%. All right, and then we have employee medical. Premium payable. So this amount the company would actually send to the insurer. All right. This is given as $110 per employee. There are 4 employees, so that works out to $440. All right. Now that's it for withholdings. All right. And so our plug here, what makes the entry balance, and this is net pay. This would be the amount that the sales salaries actually receive in their paychecks, right? And we can just plug the number that makes the entry balance. All right, so 14,380. And that's the entry to accrue sales salaries at the end of January. All right, but keep in mind that's only half the entry because the employer also pays taxes, right? And that's what we're going to do in Part B. The employer payroll taxes for Santa Barbara Express include FICA taxes, federal unemployment tax, include FICA, which is matching, so we know what those amounts are going to be. Federal unemployment tax of 0.6% on the first $7,000 paid, which is, for us, it's just going to be 0.6% since no employee has made more than 7. Each employee has only made 5,000. And state employment taxes, all right? Prepare the journal entry to record payroll tax expense. All right, for this entry, and actually let me leave some space. For this entry, payroll tax expense is the plug. All right. So FICA, I said that's a matching tax, so the amounts are going to be the same. The amount the employer is responsible for is the exact same as the amount the employee pays. All right. Now, Federal Unemployment, FUTA, Federal Unemployment Tax Act, payable. All right. 0.6%, and no employee has made more than the $7,000 threshold. So we're just going to take the 20,000 paid times 0.006, since it's a 0.6 or 0.6 of a percent. $120. All right, state unemployment tax payable. All right. Which the problem tells us is 4%. All right. Or $800. And at that point, we've accounted for all the employer payroll taxes, so we can plug payroll tax expense. All right. Okay. So those are the two entries that we're going to be responsible for when it comes to accounting for payroll. The first, basically, the employee's gross pay less withholdings, plug net pay, all right, and then the employer payroll tax expense, and the payroll taxes that the employer is responsible for. Okay, so that's that.